I'm now in love with inverse funds. They've changed a crash into a major rally and increase in my economic resources. Let me show you how. This is not financial nor professional advice. This video is for entertainment only. Today was the first time, in my eyes, that we've seen some capitulation. And this crash has followed a predictable course. Of course, they're always a little different depending on the times. And it's like Mark Twain says, history never repeats itself exactly, but it generally rhymes. Okay, and after you've been through this 5 or 6 times, about the 4th and 5th time, you're starting to get the real hang, and you're starting to try some things that counteract it. And by the 5th time, you're having some success, and by the 6th time, you're just waiting for it because you know what's going to happen. And this has followed that course. We have these intense bear rallies that just are just amazing because you have such variability. The more intense the bear trading becomes, the more you become a day trader, and you're trading stocks several times within a day and doubling down when you're wrong for the short term. And in this world, the long term means holding till the next day. Okay, but that's bear markets, and I've gotten used to it. And I'm not recommending this as financial advice to anyone. This is simply what I'm doing. It's based on my experience. I've had my face ripped off 3 or 4 times. And after you get it ripped off 3 or 4 times, you decide, you know what? That's not happening again. Because looking back, I can see what I should have done. And this time I did what I should have done. It followed a predictable course. First went the meme stocks, then went the innovation stocks, the stocks like ARK, I'll call it. Its symbol is ARKK, the Cathie Wood funds, more or less. And then went crypto. And then went big cap. And that is the biggest sign of capitulation. You can follow Apple stock. And Apple stock, the more Apple stock goes down, the more the capitulation has taken hold. And then everything goes down. The hard thing about capitulation is it's difficult to believe that it's happening. It seems so unbelievable, and these prices are unbelievable, but that's what always happens. It never goes down to where it should have been. It goes beyond where it should have been. It's going to go lower than it should have gone. And that is the human race. We do excessive on the top side, and we do excessive on the bottom side. So to think that it's just going to reach equilibrium and then stop there, that's like trying to stop a swinging ball from swinging back the other way with full force. You know, it's just not going to happen. But you know, again, it's hard to believe it's happening. It's so kind of transcendental. And I thought to myself, you know, I'm still in the stage of, well, maybe there's some place in the market where you can invest. And I was thinking energy stocks, that's got to be it. But then they started to fall today. This is Wednesday, May 18th, where the NASDAQ went down about 5%. And so my triple leverage SQQQ, which are the 100 largest companies on the NASDAQ, the SQQQ went up 15% because it's triple leveraged. So for every dollar that the NASDAQ goes down, this goes up $3. Okay. But I was looking still for, there must be some place to rightfully invest, and it must be energy stocks. But then they started to go down. And that's just because the accumulation of bad news is overwhelming. It's all bad news. We need some fundamental, big, good news to overcome the negativity. So just average good news is not going to do it. Uh, in fact, we keep getting piled on with the bad news. Uh, the possible some good news is that Ukraine is hanging in there, okay? But you would need good news of the type Ukraine is actually winning, Russia is leaving, and it's going to be okay. That's the kind of good news you would need. If that happens, the market will pivot immediately, almost immediately, I think, at least for a while, and it will help the market stabilize. But until something big like that happens, with these interest rates coming, individual companies are warning you. Uh, Walmart said that they had such a bad quarter. They called it apocalyptic. They called it apocalyptic. Home Depot is reporting the most terrible results they've had in years. And then you have hiring freezes happening. Now, this is happening at a time where it's thought, well, anybody can get a job, right? Okay. No, Facebook realizes they overhired on the metaverse, and now they're freezing hiring. Netflix is actually laying off people. And stocks like Robinhood are laying off 90% of their staff because they're in such financial difficulties. So the news is just an unremitting set of negative statistics and conditions. I mean, we're going to have famine in some parts of the world because the weather is so dry, or in some places it's flooding. But the crop outlook isn't looking good. Even for the United States, it's not looking that great. This reminds me of the 1930s. Not my parents told me about the 1930s. Okay, I'm not that old, but that's what they had. They had tariffs back in the 1930s, leading to the 1930s. They thought the thing to do was to put tariffs on, which was the exact wrong thing to do. They increased interest rates, which was the exact wrong thing to do, which made things horrible. But we learned from that, and we know you do the opposite of that. In fact, there's thoughts of taking the tariffs off a little bit to relieve some of the stress. But the overwhelming factor you have in this market is Jerome Powell wants to crash the economy. And the reason for that is only 10% of the people in the United States own 90% of the stocks. Okay? So if you crash the stock market, you hurt 10% of the people. But if you crash the economy, you hurt 90% of the people. So he's directly chosen, we're going to crash the stock market. And the news we're getting that, when we had a rally early in the week on Monday and Tuesday in particular, the market actually rallied. And then there were indications that people were just spending as much money as they ever would. Those two things in Jerome's mind, he's not saying it at this point, but I bet he's thinking it, that he's going to raise it another half point in June, in my mind, is not even a question. The question now becomes, is he going to raise it a half point, 0.75, and I think 1% is going to start to creep in if he gets horrific inflation numbers in June. So I'm going to go back to playing the hills and valleys of the SQQQ, and I'm hoping that we get dramatic good news that turns things around. And I actually have two minds of this. I hope we actually get dramatically good news, or that people finally fully capitulate and let the thing crash. You'll be able to buy it cheaper in the future, which I plan to do, and which I plan to do heavily when the time is right. The time has not been right for the last 6 months. And anyone that tells you that you better hold on to your stocks for 5 years because maybe we're going to have good news, that I, unless they're a fortune teller or have a crystal ball handy, I think that's very perilous. I think it's actually can be quite injurious to your financial health. And that's why I always say this is not financial advice. This is what I'm doing. This is what I found that works. This is what works in a crash. And a crash is the only time I do this. I don't like shorting. I don't generally short. When everything is going down, when you're going towards capitulation, the capitulation has to happen, and then you will be able to pick up stocks at bargain basement prices, and you will make a lot of money, I think, in my opinion. Thank you for watching. Thanks for being a fan. Good luck investing. I will plan to see you in the future.